Okay, so in this video we're going to talk about how it's possible for a government to get itself into big financial trouble. In the credit crunch, everyone saw how it's possible for an investment bank to get itself into trouble. Lehman Brothers collapsed, as did nearly one or two other banks as well. And of course companies get themselves into trouble the whole time and go bust. But a lot of people think, could that happen to a government? And if so, how? Well, governments are a bit like individuals, insofar as they have income and expenditure. So, as a government, you have some quite big sources of income. The main one being tax. Governments raise money from their citizens, people like you and me, by imposing all kinds of taxes on them. The big two that raise a lot of money for the UK government, for example, are income tax and VAT. There are one or two other taxes around, of course, like corporation tax that companies pay, inheritance tax on death estates and so on. But that's a big, regular source of income for most governments. And of course they influence the rates at which tax is accumulated. Then you've got expenditure. Now, what governments choose to spend your money on is a range of things. Health services, education, defence, even bailing out private sector banks that have got into trouble, as was the case with Ireland recently. So there's a whole raft of things that governments spend money on. And quite often, the income they receive primarily from tax, but sometimes from other sources, such as privatisations, for example, of state assets, doesn't keep up with annual expenditure. And when that happens, you get what's called a deficit. Now, deficit normally refers to the annual difference between income as a government and expenditure. And as this deficit accumulates, governments also keep a cumulative watch on it. So they not only monitor each year what the deficit's running at, but also cumulatively what the total national debt has reached. So worth being aware that when governments talk about a deficit, they normally are referring to the annual gap between income and expenditure. When they talk about the national debt, that's an accumulation of all of those past deficits to date. Now, of course, it could in theory be a surplus, but more often than not, especially around troubled Eurozone economies, it's a deficit each year and therefore a national debt. And the question arises, a bit like you or me. I mean, I have income, I have expenditure. How do I fund the difference? If I'm spending more than I earn, how do I pay for that difference? And the answer for a government is it does need to be paid for by issuing IOUs. Government pieces of paper saying, yeah, we need to go out into the financial markets, we need to borrow, and we'll have to pay a coupon rate, and we'll have to promise to buy back this debt and pay off the loan at some point. And in the UK, those IOUs are normally known as gilts. In America, they're known as treasuries. So they come by various names. In Japan, Japanese government bonds, but the principle's quite similar. In other words, the government's got to work out how to fund the difference between income and expenditure, and issuing IOUs with different maturities, some short-term, some long-term, is the principal way of doing it. Right, when do you get a problem? Because in theory, can't governments just keep issuing IOUs? After all, governments can draw on taxpayers to pay coupons and so on, so can't they just keep issuing these things? If the deficit grows, issue more paper. Fine, but who's buying it? And the answer is commercial investors. This is paper being sold into the so-called debt markets. And debt markets, that is to say the investment banks and other institutions that trade government debt, start to get pretty nervous once governments issue too much of it. And the evidence they're nervous is a couple of things. So, issuing IOUs is not a bottomless pit. In other words, you can't keep expecting to get away with it. Sooner or later, bond markets, sometimes known as the bond vigilantes, will get nervous These are the investors, professional investors who specialise in trading government paper, and a couple of things are indicative of the fact they're getting worried, and they may not be prepared to keep buying this government paper. In fact, they may be selling it, trying to get rid of it, and then you've got a problem. So, a couple of warning signs, if you like. Number one, debt ratings start to change. So, for example, the recent turmoil and concern about Ireland's deficit and national debt has triggered ratings downgrades. Government IOUs are rated by the likes of Standard & Poor's, Moody's, just like other bonds. So, if those professional agencies start to get nervous, the ratings start to change. And here's the problem. The lower the rating on a government bond, the bigger the return investors expect to receive for holding it. So lower ratings imply bigger yields. That makes issuing the paper even more expensive and even more difficult to do. Secondly, another little warning sign that all is not well. Spreads start to widen. That's a very glamorous sounding term. It just means this. Governments basically pay a price to borrow, depending on how creditworthy they are, just like companies. So imagine the Germans are able to borrow, that's the German government, at say 2.5% on average. In other words, that's the price the government in Germany pays to borrow from the debt markets. What investors will look at is what's the equivalent cost for, say, Ireland. And let's say it's 9%. Investors are effectively saying, if you want us to hold Irish paper, we want a lot bigger return. So the gap, let's say, is 6.5%. That's the spread. And by a widening spread, all we mean is the gap between a risky government and a fairly safe one. Germany is considered to be a relatively safe economy at the moment. There's a government that can afford to repay its debts, hopefully, begins to get bigger and bigger. So a couple of warning signs. Once a country starts to suffer ratings downgrades, sign of trouble. Once this spread starts to widen, another sign of trouble. Then the question arises, and it's the final question today, what do you do about it? Okay, 3 possibilities. So, solutions. There are 3 we can look at, as I just mentioned, and those are roughly as follows. Number 1, raise tax. That's not going to be popular, and it might be difficult to do in a recession because people are losing jobs, companies are closing down, but raising tax, perhaps something like VAT, which is a big source of revenue for most governments, is a possibility. Number 2 would be the so-called austerity measures. In other words, cut spending. So, start to really cut back as a government on what you're spending on health, education, armed forces. Find some way to pare back your overall costs. And that may involve public servants, civil servants, taking pay freezes or pay cuts. That's not going to be particularly popular either. Option 3. If you can do it, which means if you have your own currency, then how about pay off your debts by simply printing more money? In other words, create the funds that you need out of thin air to pay back the people that essentially are lending money to you. The bond, the vigilantes, if you like. Fine, but that assumes you have a currency to print and that you have control over it. Eurozone countries don't have that luxury. At the end of the day, the euro is the one currency they all use, and one of them can't unilaterally simply say, I want to print more euro. In America, And in the UK, printing money, quantitative easing, is an option, because those are two countries that still have their own currencies. So what happens if you're trapped, as perhaps some people would see it, in a eurozone with a single currency? Maybe, if that and that haven't worked, and you can't print money, you go for a bailout. Maybe you're stuck thinking, I need a big loan quickly, where am I going to get it? And perhaps the answer to that is you have to go with your cap in hand to Europe, the European Central Bank and the EU, and ask for an emergency loan. And of course, that's a solution that we're seeing one or two countries start to have to take.